Hello, and welcome to another edition of CMS Forex News. This is Alexander Shapiro, and today is Wednesday, July 9th, 2008. In Australia, last evening saw the WMI Consumer Sentiment Index fall to negative 6.7%. It's the lowest level since January 1992, as higher gas and oil prices weighed down confidence. Despite a stronger retail sales report last week, recent data is showing the economy cooling. The second release today showed that home loans fell by 7.9% in May, the largest drop in 8 years. High interest rates and borrowing costs are curbing growth in the housing sector. Following the release, the Aussie-US dollar pair traded below 0.95, the lowest since June 19th. From this oversold level, the pair jumped about 100 pips as political events brought pressure on the greenback. Overnight, Iran test-fired several long-range missiles in a show of what kind of retaliation the country can take if its nuclear sites are attacked. The increase in tension gave oil prices a lift after 2 days of sharp falls. In Japan, orders for core machinery rose 10.4%, surging above expectations of a 1% increase. There was strong demand from emerging economies. Demand for equipment dealing with semiconductors and steel led the way. In Europe, the final version of GDP for the first quarter showed GDP expanding 0.7% compared to the originally estimated 0.8%. The Euro-zone has seen recent indicators for manufacturing, services, and consumer spending all on the decline. Exports from Germany fell 2.3%, the biggest fall since June 2004, as a strong euro and weaker global growth impact demand. As a result, the trade surplus shrank to 14.4 billion euros, far below forecasts. German exports have been a strong driver of activity for the Eurozone during the first quarter. Weaker foreign demand will pave the way for a rough second quarter as domestic demand eases at the same time. European stock markets recovered from yesterday's fall, with the main indexes up around 1.5%. Shares of banks led the way as bargain hunters snapped up stocks in the battered sector. The euro-yen pair rose to a new high for the week, near 168.9, a 160-pip rally from yesterday's low. The rally ran out of steam around the New York Open as U.S. equities opened lower, giving some relief to the yen. In the UK, the nationwide consumer confidence index fell to a new low of 63. The biggest shift came in the future expectations sub-index, which is falling as a result of a weakening housing market and higher costs for food and fuel. For May, the goods trade deficit remained at the same level as in April, £7.5 billion. The pound-dollar pair hit a low following the confidence data near 1.9675. But the rest of the overnight trading and New York session saw a 125 pip surge, bringing the pair back to yesterday's high at 1.98. If the pair stalls here, it looks to be forming a sideways range. In Monday's session, the pound was pressured by a weak industrial production data. Canadian housing starts measured an annual rate of 218,000 in June, which is down from May, but still a strong figure. Unlike in the US and UK, housing remains rather robust in Canada, though for how long remains to be seen. The loonie took the offensive against the greenback, with the US dollar-Canadian dollar pair sliding 100 pips to trade near 1.01. It's the biggest move in favor of the loonie in about a week, as the Canadian housing starts release corresponded with higher oil prices and general US dollar weakness in today's session. Stocks in the U.S. started off weaker, managed to break into the green as oil prices receded from their earlier jump, but by noon were back below their open for the day. The dollar-yen pair tested its high from yesterday near 107.65, but then retreated. Price action was quite tame, with the pair looking like it's consolidating. Tonight, Japan releases its CGPI, a measure of inflation. Australia releases its employment change and unemployment rate, while New Zealand releases its manufacturing PMI. In the later European session, the ECB will post its monthly bulletin. The Bank of England will finish its meeting and give its decision on interest rates, which are expected to stay at 5% despite weakening growth in the economy. Tomorrow, the U.S. has just one release, its weekly jobless claims figure. Join us again for another episode of CMS Forex News right here at cmsfx.com.